It's loading.
There we go. Well, hello everyone. So glad to be here with you Sunday morning. I love our Sunday morning webinars because we get to spend a little bit more time than usual digging deep on whatever concept we've decided to cover for that particular weekend. Today, we're going to be covering a whole bunch of stuff. We're going to be obviously talking about 3 different coins that could potentially 10x your money and significantly more in a future cycle. And we'll discuss both of those scenarios. And let me pull this off here so you guys can see. We're going to be going through a couple of those different scenarios. But before we get started, I wanted to let you guys know, I know that this is open to both members and non-members. But if you guys are a member, if you guys want to ask some questions, we're going to take a few breaks here during this session here to answer some potential questions. Make sure you head over to the website because we're going to be taking our member questions as priority, and then our non-members will also have the opportunity to ask questions. But again, we're going to be giving priority to our members. So if you guys are watching us here on YouTube and you're a member, head over to the website, log in. You'll be able to see the same exact live stream. Click the join chat function, and you guys will have the opportunity to ask some questions there. Okay, so I'll give you guys a second to all get settled with that. My name is Matthew Brienen. I've been doing charts for about 6 years now. I've been with CryptoCharged since basically last summer when we, co-founded this together with Brian Decker and Dan Habib. We decided that we wanted to provide cryptocurrency education as well as actionable insights to help you supercharge your portfolio and better understand the crypto space as a whole because we know it's complex. So we wanted to show you guys first and foremost our website if you guys are not a member already, or maybe you're brand new and you really don't even know everything that we've got available on our website here. You guys obviously see my screen here reiterating with just a few seconds of latency, my live stream. But I want to show you guys some of the features that we have here. So what you're seeing right here on the left side is our live daily updates. So 5 days a week, Monday through Friday, we come on here, we show you, what we're looking at with the technicals, what we're looking at with the charts. We're giving you a fundamental breakdown. So if there's something that happened with interest rates or the Federal Reserve or jobs reports, we make sure to give you guys that information, but also make it digestible so you understand why that information is relevant. We cover the charts, showing you guys what we're looking at for entries, exits, potential market conditions for the time being, as well as project breakdowns. So, Brian and I love to come on and show you guys our favorite projects, the mechanics of it, why we're bullish, things that we like, things that maybe could be a potential concern in the future. We want to give you guys all the facts and circumstances. Okay. So we do this 5 days a week and we do them live. So if you guys have questions at the end of it and you join us live, we'll take 3 member questions at the end of those. If you guys don't have time for the live, no problem. Within a few minutes, the stream is re-uploaded and you guys can watch it at your leisure. And of course, use that fast forward if you guys want to use those timestamps to get to a particular piece of content. Additionally, we do selected news for you guys. So there's a lot of news out there. I know that. And it can be overwhelming and you're trying to figure out what to read, what's relevant or not. We pick out maybe 1 to 3 articles a day for you guys to read. We give you a little bull or bear right here so you guys know if the news is bullish or bearish. You guys can go in there and read that news. Very, very simple. We also give our portfolio reveals up here. So you guys get a little snapshot of what we're doing, our biggest sales and our biggest purchases. But more importantly, what we do is we give you a breakdown. So you guys can flip between our cumulative CryptoCharged portfolio, which we allocated 9K to, just to kind of show you guys what we would do as a collective because our strategies are a little different. Brian's portfolio here by top 10 assets, Dan's, and then my own, and then also our research analyst Luke's. So we all have a little bit of a different strategy. You will start to see some of the same coins pop up in here, but there are definitely some different allocations based on just the way that we like to trade and invest here. So make sure you guys are utilizing that. Additionally, right here on the dashboard, we have access to our learning center. So if you guys go to the learning center here, you guys can see everything from, obviously, daily uploads, meaning just highlights and things that we've decided that needs to be compressed as a tutorial to how to buy crypto. So I know that some of the exchanges that we talked to you guys about, like KuCoin, maybe seem really intimidating. We walk you through all of it. The best way is to get your money on there, how to avoid fees, all those goodies. We show you guys our favorite platforms for passive income, how we use them efficiently, the pros, the cons, things that you need to be aware of. And of course, just core crypto concepts and tokenomics as a whole. We know that blockchain can be confusing. So we made these bite-sized video for you guys to go in here, understand a little bit better about what each of these little things mean. And you can take it at your own pace. There's no rush to it. This is your learning experience. You decide how much time that you want to dedicate to this. Okay. Additionally, we have our technical analysis section, which is one of our most popular sections. So this is updated 5 days a week, Monday through Friday. We give you for Bitcoin, Ethereum, and XRP a little bit of a bigger write-up than some of these other assets. But for our other assets, we're separated by large, mid, and small cap. And we give you obviously the ticker up here. We give you a sentence describing what's going on with the chart. We give you areas where you could potentially find an entry under XYZ price, as well as a buy limit. So if you guys are looking to really get an aggressive position, but you want to pick up more coins, we try to identify some areas where price may turn to if the market were to obviously turn on itself for you guys to pick out some coins. Additionally, we have exits here. So we give you a 3-step exit plan so you guys can chunk out your exits and exit at different times. And of course, we show you where to purchase this coin. So if it's available everywhere, we say every major exchange. But if it's only available on 1 or 2 exchanges, we show you which exchange. The last thing I want to show you guys before we get into today's material, which is a lot of great stuff, is our weekly wrap-up report. And this is really just a powerful way to get caught up on everything we talked about during the week. So on Saturdays, these go out generally Saturday mornings. We give you a quick recap of the top 5 news articles from the week with a link back to it if you guys want to read further. We also give you a Bitcoin technical recap. So this is really understandable and digestible, by the way. I wrote this for you guys so that you guys can actually understand it and read it. So you guys can go through there, quickly read what all these charts mean, Ethereum technical recap, and then we also do the project breakdown and daily update recaps. So again, what we just talked about during each episode during the week with a link back to it. So, again, I know not everyone has time to watch 5 of these a week. So if you guys go through here and you go, oh, hold on, I got to know about this, you can just very quickly jump into it there. So make sure you guys check us out. If you guys aren't already a member, you guys can do 14 days free. And then we also have some special launch pricing if you guys check that coupon out at the top of that page there. Okay. So we're going to get into a few projects here. I've got 3 different projects we're going to be covering today. So that's actually going to be Polkadot, XLM, Stellar Lumens, and then we're also going to be covering API 3. And one thing that I really want you guys to take away from this is that you'll hear all kinds of people, especially people who aren't really deep in the space, talking about this crypto is better than that crypto. I do not subscribe to that type of tribalism. Crypto is a space that is inviting of different solutions for different tech products to identify different solutions. So not every solution is good for every application. So Polkadot does not solve the same issue that XLM solves. XLM does not solve the same issue API 3 solves. They all have very specific reasons why their protocols are built out the way that they're built out. And we're going to kind of go through the unique factors that make each of these valuable in their own ways. And then, of course, we're going to look at the technicals. I'm going to show you guys what I'm kind of expecting by end of cycle, meaning within this next season for alt seasons to kick in here, as well as maybe what we could see in a future cycle, meaning not for the short term. We're talking about 2-3 years out, maybe what those prices can maybe look like, so that you guys are made aware of some opportunities right now, where if you make some of these investing decisions, that you're putting yourself in a spot where you have the choice between selling some or all at a shorter price, or saying, hey, I've now put myself in a great enough position where I can hold some of this and see a much bigger profit long term, obviously mitigate some of those short-term capital gains and things of that nature. Okay, so we're going to start with Polkadot today. Polkadot is really one of Brian's favorite coins, but I've grown very fond of it from a fundamental standpoint. I hold some Polkadot myself. It doesn't represent one of my top 10 holdings right now, but I do hold some Polkadot, and I plan on next cycle maybe stacking some more Polkadot and taking a more aggressive position. But I'm not going to ignore the fact that there's a strong fundamental case as well as a strong technical case here that I'm going to present to you as to why I believe that with Polkadot. So what makes Polkadot unique is that it doesn't attempt to just be its own layer 1 cryptocurrency. And what that means is that a lot of these layer 1s like Cardano and Algorand and all these other protocols, what they do is they have their own blockchain and they're competing mostly to achieve the same thing. They're all looking to create one chain that people want to operate on. What Polkadot does is it offers interoperability. So what their goal is to allow all of these other projects, all these layer 1 projects, to talk to each other and be able to interact on the same chain without having to hop around and do multiple transfers. That's the goal, is to continue to bring more projects into the Polkadot ecosystem for interoperability. So this is already a very unique approach. There are some other protocols now that are emerging saying, hey, we want to do something similar, but Polkadot has really nailed it. And that's primarily because of one of their founders. Their founder is Gavin Wood, who was a co-founder of Ethereum. And that's something you guys will start to see over time, is that some of these bigger projects that are picking picking up a lot of traction, have founders, creators, developers that previously worked on another project. And we're actually going to see that with API 3 as well, that, you know, people come from other projects to identify some of the weaknesses that they found in other projects and bringing a better, more refined solution. And that's just how the tech industry works. Look how quickly technology can get evaporated, right? With televisions alone, right? You know, you bought a 4K TV 6 or 7 years ago. It was very, very expensive. You know, you walk into Walmart now, you can get a 32-inch 4K TV for like $200. You know, so, and that's just the way it goes. You have to keep up with the newer technology, and that's how these investments can be, you know, both short and long term, because we want to leave ourselves the opportunity to purchase other projects that maybe are offering a more refined version of the technology in the future. So that being said, let's get into some of the you know, overview of what Polkadot is here. So you can see by market cap, first of all, alone, it's a $20 billion market cap, almost $21 billion. So we consider everything over $10 billion in market cap to be a large cap coin. So, you know, traded on most major exchanges, a lot of volume pushing through it. You know, it's considered, you know, a large cap coin. And price has depreciated pretty significantly from its all-time high. I will show you guys in the technicals after we're done with some of the fundamentals here of what I'm looking at here as both entries as well as exits for short-term and long-term. So let's look at the first main page of the Polkadot page here. So again, if you guys ever want to learn about a project, go straight to CoinMarketCap, search the ticker in the corner here, and they're going to give you all of the legitimate resources here. So Polkadot.network is the official website for Polkadot. If we come here to the Polkadot website, it says parachains are live. We're going to get into what parachains are, but I want to take you guys through the 6 blocks they have here on the website, read it to you, and then kind of explain a little bit what they mean here. So please try not to get too hung up on the technical terms. We will make sure to cover what each of these means. So first one is, like we just talked about, true interoperability. Polkadot enables cross-blockchain transfers of any type of data or asset, not just tokens. So that in itself is very interesting, right? We're not just talking about exchanging interoperable cryptocurrencies, but other types of data and digital assets. Could mean NFTs, could mean just data in general. Wonderful. Connecting to Polkadot gives you the ability to interoperate with a wide variety of blockchains within the Polkadot network. So obviously, you know, you're still going to need some sort of consensus from these other protocols to operate on the Polkadot ecosystem. There needs to be some sort of code that allows them to interact with other ecosystems. But as long as your software has that or your protocol has that, it can be put on the Polkadot ecosystem. The second block here is economic and transactional scalability. So there are plenty of protocols out there that do a good job of transferring data securely, safely, but scalability is really the main issue that a lot of companies and projects out here are pushing to create something more scalable, because, you know, when they're first incepted for a certain amount of load and a certain amount of transactions, it works great. But as soon as you start exceeding that threshold that you anticipated, that's when things start to get out of control, like we're seeing with Ethereum now. Ethereum gas fees can be hundreds of dollars at sometimes if there's a lot of load on the network to execute a very small transaction that's maybe worth less than $1,000. So you're paying sometimes 10%, 15% of your total transaction in Ethereum fees because of that lack of scalability. So with Polkadot provides an unprecedented economic scalability by enabling a common set of validators to secure multiple blockchains. Polkadot provides transactional scalability by spreading transactions across multiple parallel blockchains. We're going to get into a little bit more of this in a second here. But the main way that a blockchain works, right, is that you have a block or a series of transactions that need to be validated. So I put a contract on there because I want to send Bitcoin from this person to this person. Everybody else loads their transactions. And then once that block is full, everybody who is running these supercomputers to, you know, solve this mathematical equation, essentially, once that block is full and it's all been validated, everybody on that list gets to share the reward, which is in Bitcoin's case paid in Bitcoin, for correctly validating that transaction block. Okay. But in this instance, they're not just depending on one transaction block. What they're essentially attempting to do here is using something called sharding. And this is used in Near Protocol. This is using Algorand. This is using Casper. We just talked about this with Casper on stream. So I'm going to just show you guys a quick graphic here of how sharding works. So when you guys have your computer, right, when you look at your drive, so some of you have one drive, some of you have two drives, but a lot of you guys now have one drive, and it's a solid state drive. And that's the fastest way that you can access data. So maybe it's 1 terabyte total, maybe it's 2 terabytes, maybe it's bigger, who knows? But in this instance, let's say it's 1 terabyte. So within that terabyte, there are something called partitions. So there's different sections that your computer knows certain types of information. So for example, in your SSD or your M.2 drive, what you'll have is a section for booting. So your computer has a specific set of instructions for booting, and it lies in the main section here, but it also lies in one of these shards or one of these partitions. So when I boot my computer up, does my computer need to call on every piece of information that's inside of that hard drive in order to boot up? Or can it just call on one shard or one partition that hosts specifically the information that I'm looking for, which is to boot my computer, to more quickly and efficiently boot my computer? Yes. And this is exactly what I'm talking about when we're talking about scalability and the ability to do transactions across multiple parallel blockchains. So that's very, very exciting in a way that I hope that Ethereum moves more quickly to work on in the future. Now, obviously, people have security concerns because, with the shards, it's easier to attack a shard, and that may be true. But the reality is, for a lot of transactions, people don't need that top level security, especially if they have to pay 10, 15, 20% of the total transaction amount to get that transaction completed. Okay. Easy blockchain innovation, not invention. I apologize. Create a custom blockchain in minutes using the Substrate framework. This is so unique. Connect your chain to Polkadot and get interoperability and security from day one. The ease of development helps Polkadot's network grow. So if you did not already build your own blockchain on whatever protocol you decided, whether it's on Ethereum or you designed your own, if you haven't taken that route yet and you're like, I want to build one, but I love what Polkadot's doing, I want to be a part of their ecosystem, you can go ahead and download Substrate. The coding language that most people use is Rust. That's going to be your best go-to. I think that you can also do it with Solidity. But without getting too technical, it's the coding language as well as the framework that allows you to create your own blockchain that can immediately just plug into the Polkadot ecosystem. That's awesome. Forkless and future-proof. So this is something you're going to see a lot more with other projects. Casper also claims to be future-proof because they're following a similar model, obviously not with the interoperability. Polkadot can upgrade without hard forks to integrate new features or fix bugs. This compatibility enables Polkadot to easily adapt to changes and upgrade itself as better technology becomes available. So let's take a step back here and talk about forks. So for Bitcoin, for example, I always bring it back to Bitcoin. We could bring it back to Ether too, but these are some great examples of what a fork could look like. So when you have a protocol, and that's what this is. Again, a protocol just means that it's the order or the rules in which something is done. It doesn't necessarily have to be related to a computer or cryptocurrencies. You have protocols in real estate, in your workplace. There are certain ways and rules in which things are supposed to be done. That's what a protocol is. So with cryptocurrencies, they're protocols because they all have their own definitions and sets of rules in which the protocol or the application has to operate in order for everything to seamlessly work. So when you have an asset like Bitcoin, for example, when it was first incepted, there was an issue with some of the Bitcoin holders, especially the miners. Some of them said, hey, we like Bitcoin the way it's working. It's fantastic. We like the block sizes. We don't need to up them at all. But then you had another group of people that said, hold on, well, we could do more transactions and we can do it with a cheaper amount of money, essentially charge less in gas fees for facilitating the transaction if we increased the size of each block for the Bitcoin blocks. And you had obviously both sides going back and forth and, trying to push their governance or their voting rights to get things to go one way or another, and they could not come to an agreement. So what happened? You had something called a hard fork. When that happens is you have now two separate assets. So we have Bitcoin Cash and Bitcoin. Bitcoin Cash has the larger transaction block, and Bitcoin has the standard block size that we've always known since inception, since Satoshi Nakamoto wrote his white paper on it. Okay. So when that happens though, what are you doing? You're obviously taking volume out of Bitcoin because some of these people want to use Bitcoin Cash now because they think it's a better asset. And you've divided the ecosystem in half basically by doing this. The other type of fork, because if the change is backwards compatible, meaning that it doesn't change the way the overall protocol works, is that people can vote and they say, hey, we want to do this upgrade to the system, but it's not going to change the overall consensus and the way that we all do things. So we can just do this upgrade and vote on it and be in consensus and move forward with that. So with this model, because it allows for separate chains to operate around the standard Polkadot ecosystem with their own sets of rules and consensus models, you never have to do a hard fork of Polkadot. There won't be a Polkadot and a Polkadot Classic or a Polkadot Cash, because they have already engineered themselves to allow other people to build around them instead of having to build on top of them. And if something happens, that they're going to have to change the way that they do business as a whole. Okay. Security for everyone. Polkadot's novel data availability and validity scheme allows chains to interact with each other in meaningful ways. Chains remain independent in their governance, but united in their security. So again, the Polkadot ecosystem and the relay chains, which we're going to get to in a second here, is what secures the whole network, period. But all of the side chains and every other project that's operating around it still can choose, hey, we want to be governed this way. We want to come to consensus this way. We want to have our own voting rights. That's all perfectly fine. The other way to think about this is Polkadot being the United States and each of these projects being its own state within it. So you still have that federal protection around it, but each state has its own laws, regulations, voting rights. Okay. And then user-driven network governance. Polkadot has a sophisticated governance system where all stakeholders have a voice. Upgrade to the network and coordinated on-chain and enacted autonomously, ensuring that Polkadot's development reflects the values of the community and avoids stagnation. So like with Bitcoin, it's open source protocol, and people can make votes to make changes on Bitcoin. But generally we see really big gaps in Bitcoin's upgrades. Like when we saw Taproot, that took 5-ish years for them to really get that going because of the way they do their governance. With Polkadot, because they're working with so many other people, there's more of this active communication that's going on where they're able to offer, a little bit more of an inclusive experience there. Okay, let's move over to understanding those chains that I was talking about. So there's essentially 4 pillars to Polkadot's consensus model here. So there's the relay chains, the parachains, the parathreads, and the bridges. Don't worry, it's all right. You don't have to memorize all of this to understand what you're investing in. Again, remember, we're focused on interoperability here and the ability to bring other projects into one ecosystem that still has safety and governance. Okay, so the first one is the relay chain, the heart of Polkadot, responsible for the network's shared security, consensus, and cross-chain interoperability. So that's like the centerpiece of everything. Then you have the parachains, sovereign blockchains like sovereign nations like Puerto Rico, right? Sovereign blockchains that can have their own tokens and optimize their functionality for specific use cases. So like I said at the very beginning of this, there's not my crypto is better than your crypto. There are different specific use cases that each of these cryptos is trying to solve here. So the parachains is what allows other blockchains to operate within the Polkadot ecosystem. Parathreads, similar to parachains, but with a pay-as-you-go model. This is crazy. More economical for blockchains that don't need continuous connectivity to the network. So let's say I have my own blockchain that I made for myself, but it's just for my company. My company uses this as blockchain because this is how we validate information. But we only have to do this once a month when we make sure that all my records are good, and we maybe use it for auditing. There's a variety of things you could build a blockchain for. But I only would need to pay to operate on this blockchain when I need to, instead of being continuously connected because my blockchain is listed on different exchanges and people need to access their coins very quickly, need high levels of liquidity. Okay, so parachains, parathreads, similar, but just 2 different ways to be connected to the relay chain, which is the main chain that Polkadot runs off of. And then bridges allows parachains and parathreads to connect and communicate with external networks like Ethereum and Bitcoin. So obviously Ether and Bitcoin are not on the parachain blockchain, but there are bridges that you can build and other types of contracts that will allow you to communicate with those networks effectively in their language, in the way that they operate their protocols, without leaving the Polkadot ecosystem. Okay. And as far as the consensus models, you guys, you can read through all of this. There is a very unique way that they go about this, but what you need to understand about this particular model is that there's going to be different levels of governance. So there's going to be the governance at the relay chain level. There's going to be governance at the individual levels of the independent projects. And then you're also going to have that 2-part authentication of people just verifying the overall network. Okay, so I'm not gonna drag you guys into this one here, but I hope that this gave you a little bit of a better understanding of how the Polkadot ecosystem works. I'm now going to take you guys to the charts, and we're going to look at what this setup looks like for Polkadot. So I have you here on a monthly chart, and I like to start with a monthly generally because I like to do my analysis top down. And what I mean by that is I want to start with a very high time frame, like a monthly time frame, and work myself down to a weekly, daily, 4-hour chart, so I can maybe pick out some entries and things of that nature. But I'm going to show you guys both the short-term and long-term outlook for Polkadot here, and you guys can make a decision on, based on what you just heard with the fundamentals as well as the technicals, if this is going to be a short-term or long-term trade for you. Okay, so if you guys aren't familiar, you guys know that we use Fibonacci's for both entries and exits every single day. If you guys really want to get a deep dive on that, I did a webinar. It's live on YouTube for members and non-members called Intro to TradingView and Fibonacci's right on the CryptoCharged YouTube. So make sure you guys go watch that. It's going to give you a really big breakdown of how Fibonacci's work. But in this example, we're using a monthly chart, and I'm trying to find out, one, what's a potential good entry here for Polkadot, and two, where could I take profit? So what I'm going to do is I'm going to stretch this out a little bit. And what I like to do is I take my Fibonacci tool, and I have mine set up in a very specific way. So if you guys pull out the stock one on tradingview.com, which is what I'm using here, it's not going to look like mine. You guys are going to need to watch that webinar to understand how to set it up like mine. But I'm going to go from the high of a period to the low of a period. So in this instance, I took it from the high that was produced over here in May to the low that was produced over here in July. And if you guys have been with us for a while, or you guys were watching, some of our other videos, you'll see that essentially most assets peaked anywhere from March, April, May, and crashed into June, July, and some assets even found their bottoms in August. So that's kind of the cycle we're looking at here. So I think that those are relatively valid Fibonacci ranges. Okay, so in this instance, we can see, looking on the left here, that the $19 to $18 range is a very strong area for Polkadot as a whole. And it's an area that's much, much cheaper than prices we saw when we were peaking over here, even in November, when Polkadot went to go make its second high. We were up here at almost $50 for each dot. So we're we're more than 50% off of the all-time high, which already mitigates a lot of risk. We're at one of these lower Fibonacci levels, this $18 to $19 range. We're obviously a little bit above it now with a little bit of a monthly candle signing a turnover here. But for you guys who've been with us, you know where we like to take our profits. It's going to be the golden Fibonacci extensions. So the upper two areas that are going to be up here are the 4.236 and the 3.618. These are my two favorite areas to identify my end of cycle targets. So a lot of people say, well, what does that mean time frame wise? Well, we can kind of get into that a little bit later and take a look at Bitcoin. I think we're very close to an altcoin season, but it means that sometime in probably the next 12 to 18 months that I expect to see these prices for these assets and to close out a portion of my positions at these prices, because I think that we're going to see a big retracement and before we obviously go, to make another bullish cycle. Obviously, the markets don't go straight up or straight down. They move in cycles, meaning they move up for long periods and bullish periods, and they also move downwards in bearish periods for long periods of time. So what are my targets for end of cycle here? So if we look at current market price, which is around $21, if we measure up here to the first target, it's about a 625% return to the 3.618 at roughly $154. The 4.236 lies up here at $178 for a 733% gain. Now, doesn't mean this is going to happen overnight. It could very well happen in a very short period like we've seen in the past, like the 2017-2018 cycle. But in this instance, I think somewhere between a 600 and 700% gain by end of cycle is very, very reasonable. Okay. Of course, you can go ahead and draw your own Fibonacci, and you can decide that you want to take profits anywhere along the way. It's $60, $100, $115. But if you're looking at, hey, where do I think this thing might top out based on Fibonacci's and, Fibonacci theory, probably somewhere between $114 and $180. It's a big range, but you got to decide how much you're comfortable with leaving on the table. Okay. Now, I need you guys to look very long term, meaning beyond the cycle. So let's say we expect this maybe in the next 12 months to all come to fruition. I think it could be sooner, but I don't like to put timeline shackles on my investing. What could I see in maybe 2, 3, 4 years from now with Polkadot if I decide to buy Polkadot now at 18, 19, 20, $21, right? Well, we can use additional extensions up here, including the 8, the 16, the 24, and the 32. And those are basically just additional Fibonacci extensions where if we continue to use the same multiplication problem, that it shows us where future targets might come in. Now, these could be skewed a little bit in the future. They might be a little bit more, a little bit less. Of course, it depends on where Polkadot ends up putting its top in for this cycle, but we could look to these upper targets here of anywhere between $328 and $1,200 per coin. Okay, this is a really big opportunity long term because again, if we want to measure this out now, again using this monthly chart from current market price at 2150 up to the first target here at 328, that's a 1400% gain. To the 16 is 2800%. To the 24 is 4,400%, and to the ultimate high that we have here is a 5,700% gain. So does that mean these gains are going to come overnight? No, but we can build a short-term and a long-term roadmap and then make some decisions accordingly with what we feel comfortable with, leaving long-term and short-term. Okay, so that's what I have for you guys on DOT. If you guys have any questions about DOT or this setup or understanding the technicals, drop it in the comments there. Just take a quick drink of water here, and then we'll move into our next project. Great. So it seems like this is resonating with you guys for the most part. So what we're going to do now is we're going to move on to our next project, which is Stellar Lumens XLM. So I did not bring one of my favorite projects onto this particular stream today, which is, as most of you know, XRP. It represents just about 50% of my total portfolio. I've been studying it for about 4 or 5 years now, but we have so much content in our library as well as from our live streams of me breaking down both the fundamentals and technical cases for XRP. I wanted to show you XRP's also very attractive cousin XLM, which is Stellar Lumens. Okay, we're going to kind of go through a little bit of the fundamentals here. I'm going to teach you guys why, I'm very bullish on this. This particular asset class type is my specialty. It's the thing that I like to focus on the most, and I'll explain a little bit why I feel that way about it. So you can see here with Stellar Lumens, it's trading at roughly 21 cents right now. The market cap is 5.5 billion, which means it's a mid cap coin. So it falls under $10 billion, but it's over $1 billion. So it's a mid cap coin. So, definitely not a large cap coin like Polkadot, but it is still a very large coin. It ranks high enough on the coin market cap here. We're ranked number 30 for Stellar Lumens here. So I think that it's a fantastic project. We'll get more into this. So XLM Stellar Lumens was founded by Jeb McCaleb, who used to work for Ripple Labs, who's closely tied with the digital asset XRP. So he, again, understands the market that XRP is after, but he's approaching it in a very different way. I hold both XLM and XRP. Again, I take away that layer of tribalism and maximalism because at the end of the day, all that's going to do is skew your long-term plan. So let's move over to the Stellar website here. So definitely, again, guys, make sure you guys spend some time going through these websites, getting a little bit more knowledge on what these are, but I'm going to give you kind of the high level stuff that I think is important for you guys to look at. And then you can choose to be a nerd like me and dive deeper into some of this stuff and understand it better for yourself. Okay. So first and foremost, I want you guys to understand what XRP, XLM, all these assets are trying to do. They are trying to create a near feeless transaction system and solve a cross-border payment issue, okay? So for most of you guys who don't know, I used to come from the foreign exchange markets. I used to trade them. Every single day, there's $6.6 trillion traded on any foreign exchange. That's more than the NASDAQ. That's more than the Dow Jones does combined in a 6-month period. Okay, so there is so much money that's traded in hands by just foreign exchange every single day, and those markets are open 24 hours a day, 5 days a week. Okay, it's a massive market. And what they're trying to solve here is allowing people to do remittance payments. So I know in America here, we're very privileged and very blessed to be able to be banked, and we're able to have access to financial institutions very, very simply and be able to send money to wherever we want to and basically a few clicks. In other parts of the world, more of the population than not is unbanked and does not have access to financial institutions. So when they end up needing to send a remittance payment, meaning that if I live here in the United States or I'm working here in the United States and I have a family over in Paraguay, I'm going to pay anywhere from 10 to 15 and 20% sometimes just to send that money over. So I'm losing a big chunk of that paycheck that I just worked hard for so I can send money back to my family and support them in another country. Okay. There's other reasons that remittances need to be done, but there's other parts of the world that are super big on making so much money with remittance payments. And this is a huge solution for that. So again, XRP is for the back end. I believe that banks and institutions will use XRP directly. I believe that XLM is more for the front end and for retail consumers to be able to use it directly, to be able to essentially knock out some of those fees and have more instant access to their money for both sending and receiving without losing all of that money in transaction fees. Okay, so you guys can go through the front of the website here. What I like at the bottom here is they really just show you how simple their protocol is. They actually, if you come down to create account, send payment, issue alert, they give you, it's only 70 lines of code for sending a payment. To create an account, it's only 25 lines of code, and you can literally just copy this and paste this into a development platform and create your own Stellar wallet without an exchange. I think that's freaking amazing. Okay, and they give you all 4 of them right here at the bottom, so you can just copy and paste that code. Obviously, you can change different lines of the code if you're a coder and make it the way that you want it to be, but they give you the code right there. So intro to Stellar. What they're again trying to do is to be able to send and trade digital representations of all forms of money, dollars, pesos, Bitcoin, pretty much anything. It's designed so all the world's financial systems can work together in one single network, right? So we have other ways that we like to transfer money now, right? We use ACH transfers, which is automated clearinghouses. We use the SWIFT network, which is just a messaging network for international payments. We use Box. We use, all kinds of different methods for different parts of the world. BEPS over in Europe, SEPA transfers, single euro payment transfers. There's all kinds of these little mechanic ways that people like to send money around the world, and they all have so many fees associated with them. It takes an extraordinary amount of time for a transaction to go from an issuing bank in America over to Europe and to be completely settled to where both banks are like, yeah, sent and received, everything's good. You can withdraw 100% of your balance. It's an excruciating process unless you have a pre-funded account, which also takes away your liquidity. So Stellar has no owner. It's anything that's owned by the public. The software runs across a decentralized open network and handles millions of transactions each day. Like Bitcoin and Ethereum, Stellar relies on a blockchain to keep its network in sync, but the end user experience is like cash. Stellar is faster, cheaper, and more energy efficient than typical blockchain-based systems. So this is why we suggest you guys use XLM for all of your transferring. If you need to send money from one exchange to another, try to avoid just using stablecoins directly. Buy XLM, send it to the exchange, then sell for stablecoins. Because you know what the average fee for using XLM to send it somewhere? $0 to send XLM to any corner of the world. Basically the same as XRP. It's a fraction of 1 penny to send thousands of dollars anywhere in the world. That is game changing. And I can do it right now. I don't have to wait for Stellar to build something. I can do that right now. I can send money from here, from in my house in Lake Elsinore, California, all the way to China in an instant, in under 3 seconds, and it will get there and it will cost me practically nothing. And the receiving party will also take instant custody of those assets, and they can do whatever they like with them. Okay. So this is what I just talked about with remittances. Each year, over $500 billion of value, $500 billion, that's almost $1 trillion a year just in cross-border payments through personal remittances. So this is not banks and institutions. This is just, like I was talking about, regular people, retail people, having the ability to send money to wherever they need to in the world. In most cases, remittances are transfers of money from foreign workers to family members in their home country sent on a monthly basis. The typical transaction is $200 to $300, and the average retail cost is 7 to 8%, usually collected in cash. So they know what they're doing. They're completely robbing them because they don't have other options. Thank you, Stellar. Sending costs can be as high as 15% when transferring money to people in developing economies. So now they're also capitalizing both on the fact that, hey, you don't have access to a financial institution, but also we're going to charge you an extraordinary fee if you're going to send it to another part of the world that also has a poor banking system. Okay, high fees to use traditional money transfer operators, MTOs, are often paid by those who can't afford it. The 1.7 billion unbanked adults in the world. So this isn't my opinion. 1.7 billion people in the world do not have a proper banking system where they can do transactions and send money for, not 8 to 15%. Okay. So this is really, for me, a big deal because you're changing people's lives. Keeping 15% of your paycheck is massive. Imagine if someone just took 15% of your paycheck before it even hit your account. That's a huge chunk. Okay. Stellar for cross-border payments. So now this is kind of the institutional side. I still think XRP is the better model for this because they have on-demand liquidity with their token, but Stellar's pretty close. Millions of businesses around the world contribute nearly $2 trillion in cross-border payments each year. The most common method for U.S. businesses to move funds around borders is SWIFT, which is a considerable amount of time, both in time and money. Like I just told you, in 2015, Stellar is an open network for moving value internationally with standard instructions, a more modern and transparent way to make business-to-business payments like SWIFT, only digital, modern, fast, and open for all. So this stuff isn't as far away as you guys think it is. If we already have all these payment rails, right? We've got SEPA, SWIFT, ACH transfers, Box, whatever you guys want to think about. If those payment rails are already in place and you just want to lay one of these protocols over it to efficientize it, you don't have to do a whole bunch of building. You just have to improve your existing system. It's like equivalent of doing an upgrade on a railroad system, all right? So again, understand, what did we just talk about? 500 million a year in personal remittances, $2 trillion a year in SWIFT transfers, $6.6 trillion on the foreign exchange markets each day. Because again, what are we doing here? We're not having to go through an exchange to transfer dollars to pesos. If I send dollars, I can just send, they can immediately receive pesos. Okay. A lot of money being moved around the world at any given time. Fast, cheap, and connected. Meet Stellar USDC, which is USD coin. Excuse me. Wallets, exchanges, payment companies, and market makers, which is, again, your Coinbase, your Binance. Those are market makers. They create liquidity for you because if they weren't there, you would have to find somebody on Craigslist to buy or sell your digital assets from you and hope that you get a decent price. Can now leverage the speed, security, and low cost of the Stellar network to operate a truly digital per dollar, purpose-built for payments. Stellar network delivers and instantly exchanges the world's digital currencies at scale. So you guys can dive deeper into this, but what they're allowing you to do here is if you're with an exchange that allows for this, or if you set up something called a trust line, meaning if you have a decentralized Stellar Lumens wallet, so you can just send XLM to anybody in the world without having to use a bank, you can actually create a trust line where when you receive Stellar Lumens, it's automatically transferred to USDC, which is a stable coin that's pegged to the dollar. So you don't even have to worry about selling that asset. So I definitely see a bigger vision for Stellar Lumens here, more than just, oh, okay, it's another digital asset that's fast and cheap to send, but I still got to sell it. There is the infrastructure here, if exchanges wanted to allow for, hey, send my stable coins, but send it over the Stellar network. They have that ability. They're just not allowing for most of it yet because they would rather collect those transaction fees for you to send stable coins somewhere else. It's 25 to 30 bucks to send pretty much any amount of stable coin anywhere, especially if you're doing a micro transaction, $1,000, pay $25 in fees. Ouch. Why? Right? I mean, what's the point of that? You're killing the entire purpose of cryptocurrency. You might as well send a wire transfer. The last thing I want to talk about here for Stellar is Stellar for CBDCs. And CBDCs are central bank digital currencies. And we're going to get more into this with CryptoCharged and talk to you guys more about the possibility of CBDCs. A lot of people don't like the idea of a CBDC because it brings in the centralization aspect into a decentralized world. But I'm going to give you guys the reality here. What does the word decentralized mean? It means that anyone can use it, right? It's open source software. You don't need permission. Anyone can do it. So who else can be involved in this other than you and me and your neighbor, John? Banks and institutions, right? If you want money to come into a project, you want true money to come into a project, you want to see real growth, you want to see a network really advance, you need banks and institutions to inject millions and billions of dollars into your project. Okay. And they're not going to continue to just dump money into projects that don't have some sort of regulatory framework and oversight. Okay, it's just not going to happen. So there's so many countries that have already formed their own CBDCs, central banks and digital currencies. Many countries talking about CBDCs, including the UK, very big on CBDCs. And I think they are going to be here to stay. I think probably within the next 5 years, we'll see some very strong framework for these decentralized currencies, but in a centralized way, because there needs to be some sort of oversight. As much as we love the decentralized factor of this, all right? So that's kind of my my 2 cents on Stellar here for you guys. I'm going to take you guys to the Stellar chart here. We're going to look again at the short-term and long-term plan for Stellar Lumens. So we got a lot more price history here for Stellar Lumens on this chart here. Ignore this gap. This came off of Kraken. So this chart has a little bit of a gap on the price history here, but other charts show that there's no gap. So don't worry about that. So what I'm going to show you guys here is, of course, we have the price history from 2017 and then the crash into 2020 from 2018. So we're going to use the same range that we just used for Polkadot. I'm going to grab a different range because we have more price history. So I'm going to use the 2017 high that we made over here at 50 cents roughly in 2017, 2018. And I'm going to go to the low that we set over here in May of 2020, all the way down here at roughly 3 cents. Big ouch, right? This is why we recommend you guys take profits when we do get towards some of these targets, because, you know, when a bear market sets in, it can be painful. So we're going to look at, first of all, the short-term plan for Stellar Lumens here. I do think that we can go beyond the 4.236. There's other ranges on other exchanges that suggest somewhere between $2.50, but I'm going to go with what we've got here and still show you why this is a very lucrative setup. So what do we see here? We did not break past our previous all-time high. I mean, we did put some wicks up here, but we weren't able to really close anything significant over the previous all-time high. When we made our high here in June of 2021, we saw this big sell-off. And now we're holding the 382 as support here at roughly 21 cents, the 38.2% Fibonacci retracement level. Again, we're mitigating a lot of our risk by being as far as humanly possible away from the all-time high, as far away as we can from these upper retracement levels over here, the 618, 702, 786, right? We're giving ourselves the best risk to reward ratio. So if we just look at the 4.236, which we know is the golden extension, many assets continue to show over time that they will turn over at the 4.236. Even if they're going to go on to make new all-time highs, they will likely turn over at that extension and see a 50, 60, 70, 80% retrace from there. So you can use this opportunity to stack more digital assets. So from this instance here, from the 21 cent point to the $2 point, what do we have? We're going to measure out here. We have a 860% return. So actually a little bit more lucrative than Polkadot from current market prices. Again, I'm not saying that you guys should hold all Polkadot or all XLM. Obviously, you should fan out a bit and mitigate your risk. But that's what we're looking at for the short term, assuming that we only get out here. I do think that maybe we peak above this because there are some other charts that suggest some different things. But let's look at the further extensions, just like we did with Polkadot, the 8, the 16, the 24, and the 32. The ultimate high over here at the 32, using the same range for Stellar Lumens, is roughly $15. Okay, so that's a very lucrative setup. So again, let's go ahead and pull this up here. Let's go all the way first to the 8, which is $3.90. That's a 1,700% return. We go to the 16, that's a 3,400% return. We go to the 24, that's a 5,100% return. We go to the 32, that's almost a 7,000% return. Again, should we hold this, all of this, and not sell anything over at this $2, $3 range and see if, you know, we get some sort of retrace? No, of course not. We should be taking a good portion of our profits at the initial 4.236, at the 3.618, at the 2.618, whatever you feel comfortable with. But under these levels over here, and these are what I expect for a later cycle, a much later cycle, okay? You have to think more than 1, more than 2 years out, most likely, for some of these targets. But what does that reward look like if you do hold a portion of it? Maybe it's 10%, maybe it's 20%, maybe it's more, you decide. But holding some of those assets with an excellent cost basis like 21 cents on Stellar Lumens gives you the opportunity to potentially hold for a 60 or 70x trade, okay? So if you guys have any comments on that or any questions, go ahead and drop them in the chat there. Take some water, and then we will move on to our last digital asset. I want to talk to you guys about API 3. Okay, perfect. So let's move on to API 3. This is going to be a little bit of a shorter one. Again, you guys can watch the API 3 breakdown that I did on the CryptoCharged website if you guys are a member and you missed that one, or if you guys want to become a member and you're checking out your 14-day trial, you guys want to get a little more in-depth with API 3, go ahead and just search API 3 in our search bar and you guys will be able to find it there. So I want to bring you this one because I wanted to bring you a bigger mix, right? So we talked about Polkadot, which is a large cap coin and has, you know, interoperability opportunities there. We just talked about XLM, which is going to help with zero cost payments and remittance payments. And it's a mid-cap coin. And now we're going to look at a solution for APIs, and it's a small cap coin. So I wanted to give you guys a little bit of a spread here as to opportunities for both market cap size as well as different utilities, so that you're giving yourself some diversification in this market, right? Like, I know a lot of people go, oh, I got 5K, which coin should I show it in? Throw it in. I'm like, throw it in 5 different coins, $1,000 each, you know, like give yourself the opportunity to see one of these ecosystems potentially bloom before the other one, or give yourself the opportunity to rotate into other digital assets. So the market cap here is only 134 million, not even 1 billion yet. It's a very small cap coin. But what does that mean? It means that there's a lot of room for growth here. So with API 3, it's now listed on Coinbase Pro, so you don't have to jump through any exchanges. Prior, it was only available on KuCoin and Gemini, but you guys can pick it up on Coinbase Pro now or Gemini if that's your exchange of choice. I love current market pricing on API 3. I think it's disgustingly underpriced, and I also have some API 3 staked for the long term. Again, you guys can check out that staking tutorial at CryptoCharged.com. So let's get into what API 3 is. So again, like I told you guys, when you guys are looking at the weather on your phone, when you guys are checking sports scores, when you guys are checking prices on your phones in TradingView or on whatever crypto exchange you're using, that is an API pull. On the CryptoCharged website, you see that ticker that's floating across the top there where it has all that pricing. We have to pay for that because it is an API pull. We are calling on somebody else's data and we do it regularly to get real-time pricing, okay? So APIs are a part of your regular life every single day. So right here we can see on API 3's website, the Web3 API economy. First-party oracles are the next generation technology to access off-chain data. So again, let's try to not get overly worked with the technicals here. What do you guys think when you hear the word oracle? You probably think like Greek mythology, right? Because, you know, you go ask the oracle, the all-seeing eye, it knows all the information. Makes perfect sense, right? It's an API, it knows everything because it can pull data from anywhere, it can source it. API 3 is leading the movement from legacy third-party articles to first-party Oracle solutions that deliver more security, efficiency, and data source transparency. So right now, because we don't have a lot of decentralized APIs, everything is centralized. So it's all monopolized by certain data providers. And with that, you can have latency, and you can also have interceptions in between and corrupt data pulls because of that, instead of just getting your information directly from a first-party Oracle. Moving over to beacons, lightweight first-party data feeds that reduce cost and scale data access for Web3. Beacons allow for smart contract developers to connect Web3 applications to continuously updated streams of off-chain data, such as latest cryptocurrency, stock, and commodity prices. Okay, so again, if you guys are not familiar with smart contracts are basically just a blockchain-oriented contract where parties can put all types of conditions and contingencies in there, and maybe there's assets that are released to other parties when these contingencies are met. Okay, and instead you can put those on a blockchain. So one, there's a record of it that nobody can erase. It's an immutable record. And additionally, you know, there doesn't have to be a moderator in between, an intermediary facilitating this escrow process. You can just create the conditions, and the Oracle or the program or the blockchain will automatically execute this contract once those conditions have been met. Okay, operated by the market's most trusted and reliable data providers, beacons are a smart, transparent, and cost-effective way and scalable way for smart contracts to interact with off-chain data as they need. So not all of this data needs to be hosted on a live server that's eating up all of this space. They can access off-chain data. Okay, and then let's go to AirNodes here. AirNode, it is a Web3 middleware that connects web APIs directly to smart contracts. So again, I can pull data directly from Coinbase, for example, if they're my first-party data provider that I want to pull the data from for pricing of Ethereum. Obviously, now the smart contract knows the price of Ethereum, so it can ensure that I put the correct number of coins in there and can execute the transaction effortlessly. Okay, so with the AirNode is easy path to Web3, and I agree with that. So I understand that some of this can be a little bit confusing, but understand that we're coming off of an older technology and we're moving on to a newer technology. So we're moving from the internet as we know it now as Web 2 to Web 3, right? If you guys think about like when we had cell phones, right? We first got that service, like when 3G first came out, everyone was losing their heads because it was so much faster, so much more efficient because of the way that we were now transferring data. It wasn't just this analog version that we were transferring data. We were completely changing it. Fast forward to 2022, 5G phones are now dropping, right? And it's even faster and more efficient. So when we're looking at these types of technologies, understand that it's not just technology that we're hoping becomes, something of value in the future. It's already happening, and you can already see other instances where that demand has come in. Imagine if you guys had purchased Sprint stock before Sprint ever blew up. And if you didn't even care if it was Sprint or T-Mobile or Verizon, you just knew that you were going to buy a piece of that cell phone tower and it was going to evolve over time and become even technologically better, you guys wouldn't care. You'd say, give me $5,000 in any share of any of those companies because that sounds amazing. So I'm not saying that API 3 is 100% the future. There's going to be other oracles and third-party providers that come along. Actually, if we think about this, API 3, one of the creators, used to work as one of the main developers on Chainlink, which is another fantastic project. But what did he do? He took all the imperfections from Chainlink, came over to API 3 and was like, boom, let's solve the Oracle problem because Chainlink still has some of these issues over here. We can just go ahead and just build our own protocol that fixes a lot of those issues. Okay. I want to tell you guys just a little bit about beacons here. So let's go ahead and look at beacons. So cost efficient, traditional Web3 data feeds rely on networks, third-party Oracle nodes built on API's first-party oracles. Beacons cut out the middlemen and the hefty fees they collect. Again, like I said, with those tickers, we pay every single time we pull there instead of because we're having to pull from a third-party provider. So CoinMarketCap gets their data from someone else, and they are the middleman that we have to pay to syndicate their data and display it for you guys, and we have to pay for that. Data source transparent. Beacons are fed directly from the API provider to the blockchain. There are no third-party Oracle nodes in the middle to attack. So no DDoS attacks, okay, which is essentially an intentional attack to push thousands, if not millions of transactions through your network and basically overload the network, crash the server, and interrupt your service. So with no third party in the middle to attack, and you just have this one-to-one connection, completely cutting out that DDoS attack. And the reputation matters here, scalable up and down. Beacons are lightweight and highly scalable. Scale up for high performance chains, scale down for a wide range of use cases that aren't feasible with traditional data feeds. So again, with CoinMarketCap's data pool, I don't need to pull every piece of information. They actually offer us like 30 different lines of information from there, but we only need 4 lines of information, but we still pay the same price, even if we want to only pull, if we want to pull all that data, if we only want to pull 4 data points, they still charge us for that. So with API 3, for example, we would be able to select which data specifically we want to pull, and they would only charge us for that data at the frequency in which we need it. Okay. Let's go ahead and take a few member questions here. Gavin, I think that you have some of our member questions here. Let's go ahead and take a look. TK, what version of TradingView is recommended to use your Fibonacci charting setup and generally the best for a mid-level trader? I am currently looking to set up. So I've recently upgraded to the Pro Plus package. I've been charting about 6 years. I'm really not using even a fraction of everything that's in the Pro Plus package. One, it's a write-off for me, so I can be a little bit gluttonous with my Pro package. But honestly, just the second level up, the Pro package is going to be more than enough for you unless you need to see like 6 or 7 charts at the same exact time. But you should be fine with the Pro package. It's like 12 or 14 bucks a month. I would go with that one. Try it out. And they also give you the chance to just upgrade to any other plan that you like at any time for just the difference of whatever it is. They'll actually just cut the number of days on your membership and let you upgrade with no extra money. So just try the Pro membership and see how you like it. Perfect. Gavin, let's take another question. Chris Hill, what's a good entry point? So I'm assuming this question came from XLM. So right now, like we're trading like at 21 cents. You can see right now we're at the 382 Fibonacci. So that's a pretty decent entry point. I do believe that we're on the brink of an alt season based on what Bitcoin's doing right now. Obviously, we need to see a back test. So Stellar could come back down. If you want to set a limit at like 19 cents and see if you get filled for XLM there. Perfect. Gavin, let's take another one. Dan Kill, are the current market prices good entry points for DOT, XLM, and APA3? Yes, they are. So especially when we're looking at these macro charts and we're looking for end of cycle, obviously if you guys are like, okay, I've got 10K, should I dump all 10K in? No, maybe split that up into 3 parts, dump 3K in today, evenly over the 3, and then see if you get some opportunities to maybe average in lower over the next few days here. You never want to fire all your dry powder at once. Perfect. Let's take that last question, Gav. Dan Kill again, should we be dollar cost averaging each of these cryptos until the next suggested exit point? So that's actually a really good question. So here's the way I like to look at my trading, whether I'm doing DCA or I'm doing limit orders. If price is ripping and it's just producing huge candles like we saw over here on this monthly chart, like these candles over here, I'm not doing any buying at all. If I am going to be doing buying, if I see a big pullback like this and a crash, then I'll pick up some based on a limit order. but I back off my dollar cost averaging at a certain point once I see prices start to rise. So in the technical analysis section, I have two parts there for you. So it says dollar cost average under this price, set a limit order here. Once we breach some of these DCA zones and I don't feel comfortable for you guys to be entering these assets, I'm going to remove the DCA and I'm only going to put limit orders if applicable. Because at the end of the day, you guys need to be loading up down here at the lows and these accumulation structures. You guys should really be stepping off the gas as we start to rise up, because you want to save some of that money for when the markets actually crash. Because generally what we see is parabolic runs for the altcoin season, maximum 2 or 3 months. Okay, that's how long they last. So you're only really sitting on the sidelines of this cash for a few months. But great questions, you guys. Let's go ahead and look at the setup for API 3 here before we close out today's show. And I'm also looking at a monthly chart here. So very, very young asset. It is available on Coinbase Pro now. I still like to purchase them on KuCoin. They have good fees as well. It just depends on where my funds are, if I've already seasoned them in Coinbase Pro and moved them, or if they're still sitting there in Coinbase. So I'm going to take the Fibonacci retracement tool here, just like we did every single time. I'm going to take it from the swing high at roughly $10. So again, API 3 is $3.60 right now. All-time high is $10. That alone should get you guys excited. Take it to the low that was set over here at roughly 15 cents. And what do we see here? Very similar story. We're stuck right between the 20% and the 23.6% Fibonacci, between $3.30 and $3.65. Again, current market price is good for API 3. You want to set a limit for $3.33. What do we see up here for the golden extensions we like to use up here? So for the 4.236 and the 3.618 is between $33 and $39. Of course, you guys can use any of these Fibonacci's here as exits, including the previous all-time high. If you guys are not seasoned and you don't feel comfortable holding some of your assets all the way up to these higher prices, always feel good taking profits and averaging out. But let's do our handy dandy tool here, measure from current market price. Oops, we'll grab the measurement tool one more time there. And we'll measure up to the first extension here. That's an 844% gain. What about to the 4.236? We are at like literally almost exactly a 1,000% gain. So just in this cycle, this is what I'm expecting. I would be obviously even happy with $21 to $24 in API 3, but I do believe the 4.236 is a magnet for end of cycle to pull assets too. So $33 to $39 is my personal unload zone, but do not feel bad taking profits in the $21 to $24 region. Now, let's talk about next cycle. Again, what does that mean? Not this year, not next year, probably 2+ years out, okay? Give yourself big timelines. Don't ever put timeline shackles on your investing. If you feel like you need to do that, you probably have too much invested, okay? It's going to mess with your emotions. Crypto is very, very volatile, but if you're patient and you build tenacity and you understand the game plan, it gets easier to hold, especially when you study the fundamentals like we just did and you understand what you're holding. If you're like, oh, hold on, I'm holding the technology of the future here. I don't need to dump just because price decided to turn over on itself. Even look at other tech stocks like NVIDIA, AMD, Google, Meta. All these stocks are very volatile. They crashed 25, 30% in a single day the other day. So moving back over to the charts here. Let's look at the upper extensions here. So the first long-term target would be $72, but the other targets that would be looking up here is between the 16 and 32 would be between $144 and $286. I personally think that like the $200, $215 mark is a generous place to consider start taking some profits. So let's again just do some measurements here. We're going to go ahead and pull from current market price up to the 8. That's almost a 2,000% gain or 1,900%. To the 16 is 3,800%. To the 5,800 is, 5,800% to the 214. And then we're looking at almost a 80x on API 3 to these upper targets. Now, of course, nobody can tell the future. We have no clue how long it's going to take to get here. But when you have the opportunity, when you find projects that are still young, you find ones with good fundamentals, you find ones that are well below their retracement levels, below their all-time highs, giving you the best risk to reward ratios, and the upside is really the most extraordinary, those are the opportunities I am absolutely swinging the bat on every single time. I'm very selective about my assets. The majority of my portfolio consists of, maybe 7 to 10 assets that I really focus on. I have some micro holdings and some other stuff that I hold, but for the majority of it, I really try to focus on that. If you have under 100K, my biggest recommendation is don't get over diversified. Focus on a maximum of 10 assets. Okay. So let's go ahead and just take a look at what these three charts look like in unison here. Again, just a little bit of a summary of what we just looked at. So from left to right, we have DOT, XLM, and API 3. from current market prices to their potential long-term 2+ years all-time highs based on Fibonacci theory, which I am a huge fan. I've been studying it for about 3.5 years now out of my 6 years of charting. We have DOT at a potential 5,800% return. We have XLM at a potential 13,000% return. And we have API 380 potential 7,700% return from current market prices. So again, does this mean tomorrow? No, but I want to show you guys that, of course, we're going to use these cycles and those lower target points to sell a good portion and then rebuy back. It doesn't have to be the same assets, but if you like these assets, rebuy back them at a lower price, from 50, 60, 70, 80% crash, and reaccumulate and build your bag up, but also have that long-term vision and understand where you want to get to go with your investing. Okay. So I really hope that this was incredibly helpful for you guys, covering some of the 3 assets that I'm very bullish on from both a fundamental and technical point. If you guys are not a member, please go ahead and check out that free trial. It is 14 days now, and you guys can choose to either do that $89 a month or $6.99 a year. The $6.99 a year comes out to under $60 a month. So obviously, if you guys are going to take your cryptocurrency investing seriously, go ahead and just jump on the annual plan, because you're going to be less stressed, because you know what? You've already paid for your education, just like you would with college, right? You're not going to pay monthly for your college. You're just going to go ahead with the community college and just pay for the semester and be done with it, so that you can focus on your studies. Additionally, we're going to be here the whole time to help you guys out with this. We're going to tell you when we're exiting, what we're rotating into, how we're taking some of the profits from certain assets that fired off before others, cramming those into laggards, and showing you how we're going to maximize our capital that we already have without introducing fresh capital in the market. We're going to teach you guys how to be consistent investors, give you guys strategy, give you guys a better understanding of markets as a whole, better understanding of economics as a whole. So I appreciate you guys all coming here today. Thank you guys so much. Make sure you guys leave a comment on our social media if you guys enjoyed today's post, or if you had additional questions that you didn't get to ask here because you weren't able to join us live, or if you just have some general feedback and stuff you'd like to see next time. So until next time, we are CryptoCharged. We're here to help you supercharge your portfolio